Today, June 23rd, we return from significant events occurring with the United States participating in the conflict in Iran. The next few days will be monitored closely, especially with any response from Iran and their remaining capabilities, as well as any negative actions in the Strait of Hormuz. Here's what we have observed in the global financial system. Global financial markets are facing heightened uncertainty due to ongoing geopolitical tensions, especially the conflict between Israel and Iran. This has led to volatility in oil prices, a cautious risk sentiment, and a stronger United States dollar as investors seek safe havens. Major equity indices have shown mixed performance, with Western markets generally flat or slightly negative, while some Asian markets, like Hong Kong's Hang Seng, have shown resilience. The divergence in regional performance is partly due to factors such as China's oil reserves, which buffer against Middle East shocks. Central banks are taking increasingly different approaches. The United States Federal Reserve remains hawkish, holding rates steady due to inflation concerns from tariffs, even as domestic growth slows. In contrast, the European Central Bank, Bank of England, and Swiss National Bank are easing or expected to ease, responding to lower inflation and fragile economies. This divergence is driving significant currency movements. The United States dollar is strengthening, the euro and pound sterling are weakening, and the Japanese yen is depreciating due to domestic policy and fiscal concerns, making it attractive for carry trades. United States Treasury yields are rising, reflecting inflation expectations and large government debt issuance, despite typical safe haven flows during geopolitical crises. Recent Treasury auctions have seen high yields and robust demand, but investors are demanding greater compensation for long-term debt, highlighting fiscal sustainability concerns. European bond markets show a preference for shorter maturities, with weak demand for long-dated bonds. United States money markets remain highly liquid, with record growth in money market funds and repurchase agreement assets, providing stability despite broader anxieties. Commodity markets are volatile, with oil prices fluctuating on Middle East developments and gold underperforming due to a strong United States dollar and expectations of higher rates. Copper prices have spiked due to trade policy and Chinese demand. Unusual options activity in equities signals both speculative and hedging behavior, particularly in sectors like cryptocurrency, solar, airlines, and artificial intelligence. Notable trends include bearish bets on airlines and some tech stocks and bullish sentiment for energy, artificial intelligence, and recycling companies. Significant business developments include major mergers and acquisitions, such as C&S Wholesale Grocers acquiring Spartan Nash and the creation of a large Bitcoin treasury company. Companies are also refocusing on core competencies, as seen with E+ divesting its financing business. The technology sector is marked by aggressive recruitment for artificial intelligence talent, Meta, new stablecoin initiatives, Amazon, and incremental advances in autonomous vehicles, Tesla. Policy changes, such as the United Kingdom scrapping green levies for industry, reflect shifting priorities that may impact sectors like renewables. So, how do we navigate the next several days? The market environment is shaped by the interplay of geopolitical risks, divergent monetary policies, and evolving economic data. The Israel-Iran conflict and the risk to the Strait of Hormuz keep energy markets volatile. Central bank divergence is driving currency and capital flows, while the United States faces stagflation risks from tariffs and slowing growth. Despite these headwinds, liquidity remains robust. Recommended strategies include long positions in energy, artificial intelligence, and recycling sectors, short positions in airlines and long-dated European bonds, and currency trades favoring the United States dollar and against the Japanese yen and pound sterling. Investors are advised to remain agile, monitor geopolitical and economic developments closely, and adjust strategies as conditions evolve. Have a look at the daily Global Financial Report listed below. Thanks for watching and comment below.